Hey Bowtie Nation, Joseph Hogue here with the most viral investing stories shaking the market this week. What everyone is talking about and what everyone is missing. Wall Street is whispering that Nvidia may be peaking, reaching $3.5 trillion again, with analyst targets topping out at 20% upside this year, and one analyst calling for the stock to fall 30% from here. And at this point, Nvidia is less a stock and more a religion. I half expect Jensen Huang to open quarterly reports with a choir, but I'll highlight the bull and bear analysis and show you why I'm still buying. Meanwhile, congressional insiders like Nancy Pelosi are loading up on one little-known stock, and if history is any guide, they're early for a reason. And Reddit stocks are back, with investors buying the dip and sending one stock up 101%. And in the shock of the week, is Tesla actually approaching value territory? These 5 stocks are making headlines from Bloomberg to Twitter, but most investors are getting caught in the hype. I'm going to show you what's driving the stock prices and which have further to run. First up, Nvidia once again became the world's largest company, overtaking Microsoft and reaching a $3.5 trillion market cap. But the tone has definitely changed on Wall Street. MarketWatch ran a warning piece this week, and some analysts are openly asking if Nvidia is the next Cisco of the dot-com bubble, a company that dominated its era, only to tread water for the next 10 years. The average of 40 analysts is only for a 20% upside over the next year, and one thinks there could be as much as 30% downside. But then there's the bull case scenario. Nvidia controls as much as 80% of the AI accelerator market, positioning it to capitalize on a $900 billion AI chip market over the next decade. Not only is it growing sales by 53% a year, more than twice the pace of growth at rival AMD, but it's turning 49% of those sales into operating profits, a profitability nearly 5 times better than AMD. So yes, shares of Nvidia are relatively expensive here at 23 times on a price to sales basis versus just 6 times multiple you pay for AMD. But adjusting these two by that growth, and it's actually much closer than it appears. This is from research I'm using for next Tuesday's video, ranking the 60 AI-related stocks on a growth-adjusted price to find the very best deals. I'd say that both of these, AMD and Nvidia, are great deals here. Shares of AMD are just so damn cheap that even that slower 22% growth makes it a must-buy. But that 53% sales growth at Nvidia makes those shares cheap in a heartbeat. Nvidia's recent deal with Saudi Arabia's Humane Investment Corporation, involving the sale of 18,000 chips and setting up the country as a premier AI hub in the region, reflects Nvidia's global footprint and growth that will continue. And we're bound to see dips in the stock on news like DeepSeek and further China restrictions, but this one you can keep on buying, buy a little each month, and never have to look back and wish you had started buying. While we were all watching Nvidia though, some in Washington were watching legislation and their brokerage accounts. This week, a handful of politicians disclosed trades so perfectly timed, it makes you wonder if they're planning something big. Recent disclosures show both Nancy Pelosi and her husband going heavy into shares of Tempus AI, ticker TEM. The former Speaker of the House bought as much as $100,000 in call options, while her husband bought call options on Tempus as well as $24 million in shares of Apple and $5 million in Nvidia. And while some of those are closed out by now, those call options were extremely bullish and ahead of key AI legislation that could come up again. That same video Tuesday is going to show that Tempus, even at 11 times price to sales, is one of the best deals in AI stocks when factoring in its 80% sales growth. The healthcare AI company's 3 product lines, testing, data services, and applications, hopes to transform the sector through its AI-enabled platform and 300 petabytes of multimodal healthcare data. Nation, talking about these Congress trades always kind of pisses me off because as an analyst, the SEC is on you like a hawk, and a lot of the big firms won't even let their analysts invest in individual stocks for fear of that front running. Washington insiders, though, seem to get a free pass to make millions, but let me know in the comments below, what do you think? Should politicians be allowed to trade stocks if they file these disclosures? On the other side of the aisle, Marjorie Greene invested as much as $315,000 into stocks just hours before President Trump signaled the all-clear with a 90-day tariff pause, investing in 17 companies including Tesla, Nvidia, and Palantir. That tells me she's either clairvoyant or subscribed to Congress's crystal ball report. And with the award for if you can't beat 'em, join 'em, after promising to ban congressional stock trading during the campaigns, Rob Bresnahan has made over 530 stock trades just in the first half of the year, including major tech and energy names like Meta, Alphabet, Exxon, and ConocoPhillips. Now, most of these are fairly safe stocks, mega tech names like Nvidia, Meta, and Alphabet. The Alphabet, ticker GOOG investment is interesting though, considering the Department of Justice is trying to break up the company in court. I've also been buying Sunrun, ticker RUN, ahead of the Senate negotiations on the government's budget bill. The House version that eliminated clean energy tax credits sent the shares crashing 42%, but there's a good reason to believe it's a rebound opportunity. That's because actually looking at the credits, Republican districts have been far and away the biggest beneficiaries of these alt-energy funding, and several senators have already come out publicly to say that they're going to negotiate for a phase out of those credits rather than an elimination. Now, that news could send shares of Sunrun back towards $10 a share, so I've opened up the July options trade that I outlined in this week's Monday market update. I'm holding the window open 3 more days on that relaunch discount, save $150 off our ultimate options course, and see how I'm using those options on Sunrun for a potential 203% return in less than a month. I'll start with the basics, then walk you through 29 option strategies, when to use each, and real-world examples. You're going to get the strategy finder, the options calculator, to show you exactly how much you can make, and all with a 14-day guarantee, but only with the coupon code linked in the description below, so make sure you check that out. Back to our stocks though, and retail investors are back, and they're not following the crowd this time. They're moving the markets. From Palantir's rocket-fueled comeback up 72% so far this year, to Robinhood's reinvention as a cryptocurrency powerhouse up 100% to new all-time highs this week. Only Tesla seems to need to be recharged, drifting into value territory for that stock. Before you follow the hype though, let's dig into what's really driving these rallies and the opportunity in these three. Looking at shares of Palantir, ticker PLTR, and first, to be totally honest, I have been completely surprised by this stock, and there's one reason for it. After calling a bottom in February 2022 and loading up on this stock at under $10 a share, I said to take profits at the end of last year when the stock hit $80 each, and what I saw is just too damn expensive. Now, it was a great run, almost 10 times your money in less than 3 years, but missed out on some of the amazing 70% run this year, and it's because, and I will absolutely admit this, I have underestimated the retail investor, the regular investors out there, pumping more than $70 billion into the market. You see, when I was coming up as an analyst back in 2005, the retail trade was basically non-existent, less than $25 billion a year in retail inflows into stocks. Now, back then, it was all the institutional money, the hedge funds and the pensions that you followed to see where that momentum trade was going. And since that money was controlled by analysts like myself, all doing the same cash flow models and valuations on stocks, when a stock got expensive on those traditional measures, everyone knew it and everyone started selling. And hey, I'll still stand up for deep stock research and analysis every day of the week and twice on Sunday, but now you have to also build in that element of social sentiment. You have to follow the Reddit boards and that investor enthusiasm for a brand. It's why I've started incorporating our unique investor momentum index and these social cues into Wednesday's videos. Back to Palantir though, and while I was worried about a slowdown in government contract revenue into this year, the company has more than made up for it with growing sales by 71% in enterprise customers, against a slowdown to about 45% growth in the government segment. Even in that government segment, though, the company has been able to land major contracts, including $30 million from Immigration and Customs, and a $795 million agreement with the Department of Defense. So strong government ties and that increasing commercial adoption should position the company for continued growth, with analysts forecasting 35% sales growth this year and 28% next to $5 billion. So while that price-to-sales ratio of 103 times seems absolutely batshit crazy, 5 times more expensive than even shares of Nvidia, which is growing its sales by 53% a year, as long as Palantir keeps up that 30% plus growth and stays on top of mind for investors, that dip buying is going to continue to support the stock. Shares of Tesla, ticker TSLA, got absolutely crushed yesterday and are down 26% this year on fears that Elon Musk has pissed off both the Democrats and now the Republicans. But could the stock actually be coming into value territory for the first time since it bottomed at $150 a share last year? Now, I'm not saying this is going to be an easy or quick rebound, but the stock is operating under peak fear right now. Sales are down double digits in both China and Europe, with BYD dominating Tesla's second largest market, and deliveries down from 10 to 30% across the EU. And while Tesla's profitability means competitor EV companies are hurt more by killing that $7,500 tax credit for the cars, it's going to dent Tesla sales as well. Sales are expected flat this year, but to rebound 20% higher next year to $118 billion as the company rolls out its refresh cycle. And some of that recent sales weakness has been attributed to buyers waiting for the 2025 refresh of the Model Y, the S, and the X, as well as a new lower-cost Model Y that could bring new buyers into this market. I've been skeptical of modeling any robotaxi revenue into this stock, but if Tesla can even reach that $118 billion in sales next year, the current price would be just 8 times on a price-to-sales basis. That is a huge discount to the valuation multiple we've seen in the past, though it did drop to about 6.3 times last year. And while Musk has definitely lost some friends with Democrats and Republicans, investors still seem to have his back, with the shares consistently in the top 5 mentioned on Reddit, and a vocal buy-the-dip support. That said, the next 3 months could be especially volatile on Tesla's robotaxi rollout in Austin. Musk has said that the robotaxi deployment could scale up to about 1,000 vehicles within the next few months, but there is a very real risk of accidents with that camera-operated system. Even Waymo, with its LiDAR-based system, went through a tough learning curve with accidents over the first few years, and any report could send Tesla stock crashing along with the cars. That's why I'd be using an option strategy, maybe selling call options against the stock if I were going to be buying over the next few months. That's going to lower your risk, but you can also just wait and see and buy on any dips. Shares of Robinhood, ticker HOOD, are up 100% this year as it moves closer into that crypto space. The company closed its acquisition of Bitstamp last week, bringing more than 50 global crypto licenses and an institutional client base that Robinhood has always lacked. This is a much bigger deal than the market has let on and positions the platform to be a stronger competitor to Coinbase for that crypto service. Now, some of that recent upside has also been on the hopes that the stock is going to be added to the S&P 500 index. On a market size of $64 billion, the company is certainly big enough to qualify as one of the largest 500 companies, especially considering the smallest company in the index, Caesars Entertainment, is now just $5.4 billion. Now, in our Wednesday Momentum video, I suggested waiting for a better price on shares of Robinhood, and I stand by that analysis. The Bitstamp acquisition is a long-term positive for sales, but margins are tight here, and on a 22% revenue growth expected this year, it's not exactly a steal at 20 times on that price-to-sales basis. The company's reliance on smaller investors leaves it more exposed to those ups and downs in the market, so I think we get a summer sell-off and a better price over the next few months. Get your $150 coupon and a 14-day free trial on our Ultimate Options course with the link in the description below. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.